For our private equity transactions, what we're normally doing is going out, we're working with wealthy investors who want to put money into a fund. These are guys that may be doctors, attorneys, etc. They have discretionary capital, and they want to put money into a fund, and then we take that money from the fund and we actually invest it alongside of developers. In other words, we're the developer's capital partner. So a lot of developers, and given what's happening in the marketplace right now, you got guys like Kevin who in the past who would have lent you 80-85% on a construction project. Now you would go, what, 70-75%?
It's gone from 80 to about 70 to 75.
75. So now a developer has an option then. Either he can try to come up with more equity in order to meet the requirements that Kevin has imposed. But guess what? Developers hate using their own money. That's the whole point of getting into real estate. They love to use other people's money. So they don't ever want to use their own money. So whenever they can get other people's money, they much rather do that. It takes the risk off them, and it increases their cash-on-cash return. The less of your own money in the deal, the larger your cash-on-cash return is going to be. So a lot of times they go out and seek a capital partner like ours in order to come into the deal and help partner up with them. Now that doesn't mean we're not managing construction. We're not even managing the real estate. The developer still has to do all that. He still has to have all that responsibility. We don't want to get a phone call if a window gets broken out of the property. That's not what we're for. We don't do any day-to-day management. But if a major change is going to happen with the real estate, if the asset's going to be sold, if it's going to be refinanced, if there's a major tenant coming into the asset, then we obviously have to sit at the table and help make those decisions with whoever our partner is.